Have you ever been curious about Cathie Wood's recent remarks? Among the many well-known figures in the financial sector whose opinions are genuinely regarded by most people is renowned investor Cathie Wood. Continue to watch and listen to see what she has to say this time. Bulls and bears in the Tesla market typically take the advice of experts into consideration and either stick to their guns or go all in. Of course, even experts disagree on a number of equities, including Tesla's. Nevertheless, despite the company's many problems, some people are still optimistic about it, while others are incredibly negative. You can watch today's video to hear from Cathie Wood. Tesla's stock price is still bouncing between $800 and $900, even though it appears to have recovered from its recent decline and is currently trading in the $600 to $700 area. The recent global disaster, the COVID-19 epidemic, which ravaged nations and severely disrupted Tesla's and other firms' supply chains, is to blame for the recent swings in stock values, including Tesla's. On the other side, the Russia-Ukraine war had a significant impact on the economy when China imposed a lockout due to its zero-COVID policy, while other investors were concerned that the United States may have a recession the next year. Cathie Wood, the creator of our investment management division, believes that one hit has already occurred and that it may end next year. We actually think we'll be coming out of it in 2023, but many economists and strategists have been resisting the idea that we are in a recession and believe the United States may enter one next year, stated Wood, the chief executive officer and chief investment officer of ARK, during the company's monthly meeting a few days ago in late June. The United States is already in a recession, Cathie Wood cautioned. In an interview with CNBC, our self-confessed CEO, Cathie Wood, acknowledged that she had misjudged the level of inflation and went on to suggest that the U.S. economy is probably now in a recession. Wood attributed the increased price pressures beyond her initial projections to supply chain interruptions and geopolitical concerns, such as the conflict in Ukraine. She added that a recession had already started, mostly due to poorly managed inventory. Although she acknowledged that the United States is currently experiencing a sizable inventory slump, she insisted that it will not resemble the systemic recession and financial crisis of 2008 to 2009. It will be more of a garden variety, she clarified. According to Wood, problems with the supply chain caused big merchants to mishandle their inventory, which resulted in an abundance of some completed goods, such as furniture, which was in high demand during the epidemic. She claimed that issues still plague even the world's most well-run businesses. She continued by saying that, in her 45-year experience, she has never seen a larger surge in inventory than she has in the last year. According to a 2008 analysis by the Federal Reserve Bank of San Francisco, the average length of a U.S. recession from the mid-1940s to 2007 was 10 months. Wood stated that innovation is recession-resistant, citing the recent return to growth stocks as evidence of this tendency because of their higher growth rates than the rest of the market, which is more likely to be impacted by the cycle. The longest of those periods lasted only 6 months. Investors will be closely monitoring the statistics as the Federal Reserve attempts to control skyrocketing inflation through tighter monetary policy. This will help them determine the likelihood of rate hikes by the Fed. Although the July CPI statistics may show a flat, slightly upward, or slightly downward trend, Wood anticipates a reduction in inflation in the upcoming months. Another indication of the inventory glut that businesses are currently attempting to address is the recent decline in the e-commerce-focused Adobe Digital Price Index, notes Wood. According to her, innovation is a form of good deflation, especially when it is technologically enabled. The good news is that the U.S. is starting to receive evidence confirming that the economy is in a recession. The bad news, according to Wood, is that the Fed has become exceedingly active and hawkish. She thinks that since China and Europe have also been experiencing a recession, it can now be referred to as a global recession. How do you feel about the current price of Tesla stock? Tell us in the space provided for comments below, Wood said. I think the fears here are going to shift from rising interest rates and higher inflation potentially to recession, especially, and you've heard me on this before, because we see inventories piling up throughout the ecosystem, Wood said. Innovation stocks in the public equity markets are down from 50% to 75% in the last year, Wood stated. They are starting to get a lot of indicators that prices are coming down, and she thinks that the inflation that everyone has been worried about is the wrong way of looking at the world right now, she said. They think the greater risk is deflation. One deflationary force is fiscal policy, according to Wood. Federal outlays are growing at a very slow rate. Although the current age and the 1970s have been compared by economists, federal spending Growth never decreased during that time, the speaker stated. We were wrong on one thing, and that was inflation being as sustained as it has been Wood stated. The supply chain is shocked that it has taken more than 2 years, and naturally we were blind to Russia's invasion of Ukraine. Though it has created conditions for deflation, inflation has been a greater issue. Nevertheless, they think that while deflation itself is not a negative thing, the way the Fed has handled it is, the speaker stated, deflation can be a very positive thing if it is brought on by advancements in technology, and the United States will undoubtedly see a lot of that in the future. However, at the moment, they are seeing poor deflation, which the American economy will need to overcome in order to have a better understanding of. When there is a broad downturn in economic activity, a recession in economics is defined as a contraction of the business cycle. This is a brief period of economic downturn marked by a sharp reduction in commerce and industrial activity, as seen by a decline in GDP over the course of 2 quarters. Recessions typically result from a sharp decline in consumer spending. The rate of price growth during a specified time period is known as inflation. Usually, inflation is measured broadly, as in the case of a country's cost of living increase or general price increase. Conversely, when the inflation rate drops below 0%, there is a decline in the overall level of prices for goods and services, which is known as deflation. Over time, inflation lowers the value of money, but abrupt deflation raises it. The majority of economists feel that the United States has not yet experienced a true recession, but Cathie Wood of ARK Invest isn't one of them. Wood, who is well known for placing large wagers on cutting-edge digital companies, asserted that the U.S. economy is already experiencing a recession, even though it hasn't been formally announced. In order to comprehend Wood's thesis, it's critical to keep in mind that, according to official definitions, a recession occurs when there has been 2 quarters in a row of negative GDP growth. By that standard, it would be reasonable to determine that at the time of the August GDP data release that followed the 1.4% decrease, the U.S. economy had already entered a recession. In the first quarter's GDP, Professor Jeremy Siegel of the Wharton School of Business concurs with Wood that the United States is currently experiencing a recession. Siegel stated to CNBC that the first half of the year's economy most certainly shrank. He said, "I think we're actually in a mild recession," noting that the economic downturn is expected to continue into the 3rd quarter based on the indications he is monitoring. In particular, he noted that statistics on the U.S. money supply has decreased, indicating that inflation is beginning to stabilize. What impact would a recession have on Tesla, the top EV manufacturer? Over the past 2 years, Tesla has shown a respectable level of financial performance, helped by the booming demand for electric cars, the mass-market Model 3's production ramp, and the establishment of additional production facilities. Nevertheless, Tesla does not appear to be significantly harmed by a recession. Economic downturns usually result in a sharp decline in sales for automakers, but Tesla's business is predicted to do far better. The adoption of EVs is still in its very early phases, and demand for Tesla has typically outpaced supply. Tesla had previously stated that it might reach 60 growth this year and is projected for above 50 delivery growth over a multi-year period. This suggests that demand growth should continue even in the case of a slump. Furthermore, economic data suggests that this recession won't be particularly severe, with bank capitalization staying high and consumer savings having increased since the pandemic. For more of this stuff, check out Tesla stock and our other films.